Hello, everyone, and welcome to At Barrons. I'm Andy Serwer, and welcome to our guest, Vlad Tenev, CEO of Robinhood Markets. Vlad, great to see you. Thanks so much for joining us.
Yeah, thanks for having me.
So I think you're 37 years old, correct?
That's right.
So you founded Robinhood, 11 years ago, and the company's grown tremendously. I'm going to ask you the big question first, which is, where do you see Robinhood 10 years from now, 20 years from now, 30 years from now? Because you could still be running the company at that point.
Yeah, quite possibly. I think over the next 10 years, Robinhood is going to expand across two independent vectors. One is to go from being US only to global. And we started that earlier this year. We launched in the UK and European Union. And at our recent Investor Day, we announced that we've chosen Singapore as our APAC headquarters, so we'll be in Asia next year as well. So from US to global, and from consumer retail to also business and institutional. And I think that we've done very well. I mean, so some would say Robinhood has changed the brokerage industry in the past 10 years, but our customers want more from us. We see an opportunity to serve different types of customers. And so the ways that I believe we can scale the business another 10x there's a multitude of them. And I think we're going to tackle many simultaneously.
I want to drill down into some of those points you just made, Vlad, but also just sort of acknowledge the point that you guys are part of the zeitgeist of investing over the past 10 years. And that's reflected a little bit in the stock. I mean, it's up a lot recently over the past, say, 12 months. Not so much from the IPO, if you go all the way back.
Yeah.
And then down from that high of 70 back during the meme madness.
85, actually.
85. I'm sorry, I shortchanged you. You touched 85. So how do you handle that? And what is your thinking on those sorts of fluctuations?
Yeah, I think that having done this for 11 years, as you pointed out, we've gotten used to going through some cycles. So in the early days when we were a small technology company, everyone was rooting for us to succeed. It was a little bit of a David versus Goliath underdog tale. Robinhood taking on these massive incumbents who are entrenched, who have, billion-dollar marketing budgets. And so everyone was sort of rooting for us, and so the perception was very positive, but we had kind of wind at our backs ever since the beginning. And then probably 2018, 2019, somewhat paradoxically, right after we forced industry change, so all of our incumbent competitors effectively copied our business model by dropping to zero commissions, and they started copying our user interface by making mobile apps that look very much like Robinhood. Around that time, the sentiment became more negative, right? Which I think is paradoxical, because I would have thought, if I didn't know anything about this, that it would be the most positive then. But it wasn't. It became negative. And then there was positivity reemerging at the beginning of COVID, when everyone started investing and we had a huge influx of new retail traders and investors in the market. And then, of course, 2021 and 2022 was rough, and so we're going up again. So I think the only way to really prepare yourself for something is go through it once and make it out the other side to talk about it and think through it. And then now it's been 2 or 3 turns of this, and so I feel like a veteran at going through the ups and downs of the business world at this point.
Yeah, that's fascinating. I mean, usually the narrative arc is in America, in American business, take them up, say great things, and then on the way down, they get too big, say bad things. But you've actually gone through a number of those. It's kind of interesting, and you continue to do that, and you're going on another upcycle right now. A lot of the growth, some of the growth over the past year has been about people being sanguine over crypto. And I'm wondering, and people are looking forward into the next administration as well with that in mind, and I'm wondering how sustainable you think this next leg up of crypto and digital assets is.
I think it's still very early in the technology adoption curve. of crypto. I would say that still very, very niche. I mean, some folks have crypto as a small portion of their portfolios. I mean, an even smaller number of people have crypto as a very, very large portion of their portfolios. But the way I see the evolution of this technology is that crypto is actually going to underlie many of the traditional financial assets that people currently invest in and institutions invest in and trade. So much like we've gone from mainframe to on-premise to cloud for our financial backbone, the financial backbone is going to adopt blockchain technology. And the reason I'm confident in saying this is that we actually see both businesses. You know, we're one of the largest cryptocurrency providers, and we also are one of the largest traditional equities and options and soon to be futures brokers. So we have scaled businesses across both of these domains. And the costs of operating our crypto business are significantly lower. And that's because a lot of these intermediaries that you need to process a stock trade or any type of financial transaction, if you think about central clearing houses or transfer agencies or payment processors, a lot of them are running on mainframes. And in crypto, they've been replaced by software. So instead of having giant mainframe-based organizations operating, a clearing agency, it's all computer code. And so that's made the cost 10 times lower. And if you think about the advantages of moving traditional assets like stocks onto blockchains, it's actually not just the cost, but the customer experience is dramatically better. So one example of that is we offer a product in the US called 24-hour market. Very innovative product. Not many have figured out how to offer it. It allows you to trade over 1,000 single name stocks 24 hours a day, 5 days a week. And it required a lot of technology, a lot of complex integration work to make that product available. And yet it's still 24/5, not 24/7. Because the mainframes don't run on weekends. They don't have people putting the punch cards in them, right? Whereas blockchains are running 24/7 by default, you get fractionalization by default. And so the cost is a part of it, but also the capabilities and the user experience are huge as well. So I think in the future, traditional assets are going to make their way onto blockchain infrastructure. You're seeing an early form of that with US dollar stablecoin issuance, particularly abroad, where it's become the dominant way for people in countries with rapidly devaluing currencies to get access to the US dollar, to the point where the vast majority of blockchain transactions are dollar stablecoin transactions now. And even a few months ago, there was a report that USDT, the Tether stablecoin on the Tron blockchain, has exceeded Visa in daily transaction volume. And that Visa is a very large player in the payment space, so that's not a small feat.
Yeah, I mean, seems like you put some thought into this. I want to ask you also about sports. I know you're talking about that a little bit, and also events.
Yeah.
Events you've already gotten into, sports you're talking about. Why wouldn't you, Vlad, want Robinhood to be a platform where you could go to for stocks, crypto, events, and sports? A one-stop shopping platform. Isn't that what you want to do ultimately?
Ultimately, we do want to offer all things. I mean, the 10-year vision you had asked about, I think in 10 years, anyone, anywhere in the world, regardless of whether you're an individual retail consumer or a business or institution, should be able to have all of their financial assets in Robinhood, where we're the custodian, and all of their financial transactions should be processed through Robinhood. So in short, yes, I do think we always get the question about sports gambling or betting, which I would just put as very different than regulated futures contracts or event contracts, which are CFTC regulated hedging instruments and derivatives. And it's not yet clear whether sports will go in that direction. If it does, I think we'd like to offer all selection. in terms of more traditional sports betting, I think that's a little trickier. I think that people don't generally think of their long-term investments and like the sports bets in the same bucket, even though younger customers and our customers tend to be really interested in both. So I wouldn't rule it out. I mean, eventually I'm quite interested in these products, but I also wouldn't expect Robinhood to launch it, very, very soon.
Right. Talk to us a little bit about your TAM, your total addressable market, what the opportunity is, and more specifically about how you intend to achieve that and reach all these new potential customers.
The TAM is quite large, and there's sort of three arcs that I like to think of our business in. The first arc is essentially leading the active trading market. Right now we're number 2, but we're growing market share.
Number one being?
Number 1 being Schwab. So the Schwab TD combined entity is number 1 across options and equities. And we have most visibility into our market share in equities and options. Right now, we think that extrapolating the current growth rate and market share, we'll get to number 1 in options before 2027, number 1 in equities before 2029, and the aspiration is to cover that across all assets that we offer, including crypto. And right now, you look at past 12 months, Robinhood revenue is about $2.5 billion. Total active trading market opportunity is about close to 10 times that, about 20 billion in revenue. But then there's a bigger opportunity, and an opportunity for us to have much more impact, because active traders have other non-active trading financial needs. And of course, not everyone wants to actively trade. And so the bigger opportunity is becoming the financial platform of choice for the next generation. And I think we have a great opportunity to do that, because if you look at our popularity with millennials and Gen Z, we've got more millennial and Gen Z customers than our main competitors.
How many customers do you have right now?
Right around 25 million in the US. Right. And we crossed 100K in Europe and the UK, where we launched earlier this year. So we also expect that to grow quite a bit. Millennial and Gen Z have evolving financial needs. They're inheriting a lot of wealth. We throw out this number, 84 trillion. 84 trillion in wealth is going to go from silent generation and baby boomers to millennial and Gen Z over the next 2 decades. There was an article earlier today where the number was bigger. It was 120 trillion, something like that. But anyway, it's a very, very large number. A lot of wealth is going to be changing hands. And it's going from people that needed stockbrokers and relied on visits to physical brick and mortar bank branches to younger folks who have the tools and the expertise to manage their finances on a smartphone from home. I think we're very well positioned for that wealth transfer, and we're making several moves to actually put ourselves in an even better position. It started with retirement, continued with our Robinhood Gold high yield product for storing cash, and then recently, actually, we've entered the RIA market through our pending acquisition of Trade PMR, which is a registered investment advisor custodian. And the focus is really going to be on multi-generational wealth management. So how can I help not just a millennial, but maybe their parents, their kids, some of them have kids, and do a holistic, family-based wealth management experience that goes across generational boundaries. And nobody really has done that yet. If you look at advisors, 70% of millennial and Gen Z that inherit money end up firing their parents' advisor, which is a staggering number. And we think that number can be much lower.
Well, it'll be interesting to see whether the youngs can get their advisor and get buy-in from their parents. So that'll be an interesting, if you're their advisor.
Yeah.
Right? So that'll be an interesting challenge going forward. I can see that. How can the regulatory environment, when it comes to your company, be better optimized? Where do you think there's room for improvement?
I think one is a cessation of regulation by enforcement. I think regulation for enforcement is fundamentally bad for the country because everyone wants clear rules of the road. Customers want them. They want to know that investments they make and financial products they use are robust and safe, and that someone's watching and making sure that, industry doesn't go untoward and we don't let in bad actors and things like this. Businesses want it, and I think generally speaking, Washington would like that as well. Gensler has taken the regulation by enforcement approach for a variety of reasons, but I think it's been bad for the country, bad for the industry certainly. And I think in this past election, you saw people voting and actually rejecting that regime. So I think that's why there's much more optimism. I think like the low-hanging fruit is ending that regime and then providing some clarity to the industry, because with crypto in particular, although this is a broader problem than crypto is just the easiest to talk about because it's more simple to understand. But they were going after artificial intelligence and machine learning as well with what they call the predictive data analytics rule proposal, which would have been very, very impactful. I mean, it would basically prevented the use of AI in financial services, which I think would be a problem for customers. But yeah, we're hoping that the new administration will bring in a lot more clarity and we'll finally get some legislation for crypto, which has been sorely needed.
Right. Make the case, Vlad, for investors to hold the stock or potential investors to buy the stock. And maybe you can speak to profitability. I know that over the past 12 months, you've been profitable. Is this something you want to sustain, want to keep going, or are you going to have to make investments and swing back and forth?
I believe that over the long run, we will be able to grow revenue faster than costs. And of course, we'll be making investments, maximizing long-term shareholder value and earnings per share over the long run. But the business scales very nicely because it is fundamentally a technology business. 90% of our costs are fixed. We're investing heavily in the areas that are growing the fastest in our industry: cryptocurrencies, artificial intelligence, two big technological shifts. We believe we can be a leader in both, and we're making the investments there. So I see no reason why we can't continue to do that. I mean, for the future, for the foreseeable future, the market opportunity is quite large. Right now, the revenue of Robinhood is $2.5 billion, roughly, over the last 12 months. That's up year over year. But if you look at the total market opportunity across our three arcs, which is leading in active traders, number one in wallet share for the next generation, and being the number one global financial ecosystem, that's a $600 billion revenue opportunity per year. So we're very, very small relative to that. I mean, less than 1%. And then if you look at the assets, right now we have under $200 billion in assets. It's growing rapidly, but in some respects, there's over 100 trillion that's going to be changing hands and flowing to younger generations. So we're still very, very small relative to how big the market is. And if I think about our advantages, a lot of things are going to change over the next few years, but people are always going to want the lowest possible costs and the easiest to use experience, particularly on mobile, which is the most important device for people. And those are the areas that we're kind of squarely focusing on.
Vlad, I have to ask you about the movie Dumb Money, and your company was portrayed in that. You were portrayed in that.
I was.
It's back to the meme stock GameStop era. What did you think about the movie?
I thought it was okay. Certainly not an Oscar contender. But yeah, I actually didn't see the whole thing. I thought that my mannerisms were pretty well captured, but I thought it was a little bit interesting that a movie can be made about someone without anyone kind of reaching out. And I mean, maybe they were afraid to do that for whatever reason, but I would have liked for a blessing, at least. Maybe a blessing, not permission. That would have been, I think, a classy thing to do.
Well, then did they ever ask for forgiveness? Because if you know and ask permission, do you ask for forgiveness?
No, they definitely did not.
Fair enough. And final question, what do you like to do when you're not running Robinhood? What are things that sort of get you going?
Well, I don't have much free time. I really am trying to look after my health. I think healthy body, healthy mind, healthy business. So they actually covered my workout routine in Men's Health. I don't know if you're a Men's Health subscriber, but
Probably should be. But
I have about 30 copies of that magazine where they followed me around and I showed people how I work out. So that was fun. That's a big part of it, and just spending as much time as possible with my family. And I've been interested in mathematics since I was a math PhD student. Dropout. I never finished my PhD there at UCLA. So I started a business doing mathematical AI reasoning where I'm chairman. So I spend some time helping out there and hopefully not being too annoying to the CEO and leadership team.
bit of a side hustle or just a pet
Well,
project?
I wouldn't call being chairman of the board of a company a hustle, but
That was a
some
joke.
might call it that.
Fair enough. Vlad Tenev, thank you so much for joining us.
Yeah, thank you. It's been a pleasure.
This is at Barrons. I'm Andy Serwer. We'll catch you next time.